Title of today's trading video is Feeder Cattle Futures. So there's a difference between live cattle and feeder cattle, and you just need to know the basic difference before you trade them. Now, they're pretty close about the way they trade, but one thing is the feeder cattle have slightly lower volume. As you can see here, there's only 1,652 contracts traded today, and in the live cattle market, there's 19,519 futures traded. So it's definitely a thinner market. Some things to let you know about that. Here are the months they're traded, and you can see January, March, April, May, August, September, October, and November. They're open from 6 p.m. to 5 p.m. East Coast time on Globex, but the best time to trade them is also when the live cattle futures are open from 9:05 till 1:55 Central time. And then from there, you need to know the difference in the tick value and the point value. So for the live cattle futures, it's $400 a point. For the feeder cattle, it's $500 a point. They're both the minimum tick move of a 0.025. Minimum move on the feeder cattle is $12.50, and a minimum tick move in the cattle is $10. So now that's good information from a theory standpoint. This is a daily chart of the live cattle futures, and you can see that they trade fairly decent. There's a lot of expansion and contraction, and they retrace almost every single bit of the move that they go. So in other words, if you get a high side move up, it'll retrace at least half, and sometimes up and retrace 100%, which is pretty normal for the live cattle futures. Let's compare this and contrast this to the actual feeder cattle, and you can see that how they trade is slightly different. You can see they trend a little bit better, but they're also thinner. So that's, they have a positive aspect, and then they also have a negative aspect, because if you're going to trade larger contracts, they're going to be a little bit harder to get out of. One of the most popular trades that's the most profitable also is the Goldman roll, and you'll hear a lot of pit traders talk about the Goldman roll. Other thing is they'll arb a lot of them. You'll have a pit trader in the pit, and then you'll have somebody on the outside of the pit, and they'll arb. They'll play the bid-ask difference. You have to be in the exchange at the pit to do that. So the other trade that you can do if you're not doing that type of trading is you can what you can do is the Goldman roll. If you can figure out which way Goldman Sachs is either long or short, when they roll over their position, you have a good shot of making money on that trade. Good luck. Hope it helps. I'll see you tomorrow.